It's a privilege for me to welcome all of you for joining this session styled as a fireside chat titled Bridging the Gap Financing Affordable Housing in India. Adequate housing is central to human dignity, economic mobility, and social well being. Yet, India faces a staggering urban housing shortage of nearly 29 million units, with 99% of the gap affecting economically weaker sections and low income groups. While the Pradhan Mantri Jan Awas Yojana has sanctioned over 1.2 crore urban homes since its launch, financing remains a critical challenge for scaling impact. This discussion, as I said, styled as a fireside conversation, will explore innovative strategies to close the financing gap and highlight how India can create a robust ecosystem to ensure that safe and affordable housing becomes a reality for all. I would like to welcome our esteemed panelists for this session. The session will be anchored by Satish Nair, Chief Business Officer, Vastu Housing Finance Corporation, who will be speaking to Madhusudan Menon, housing expert. We look forward to an insightful discussion. With this, I would like to hand over the conversation to Mr. Satish and Madhusudan. Thank you.
Good afternoon, everyone. Well, I know it's a pretty engaging session going to be, but hopefully we'll try to keep it to the point and discuss across. So, welcome everyone. Welcome, sir. Good to see you back again. Of course, just a brief introduction about Madhu, sir. Um, he's a veteran in the affordable housing finance space. We've all learned when we started Vastu, the company which we actually looked at was Madhu sir's company and modeled around it. So let me first thank to give that vision to us to start Vastu, and also come into that perspective that we started with these. If you look at if you recollect back, to make it more affordable and more accessible, tech was something which played at a very very big role, and that's what's the same thing with MHFC. Also, we looked at it that. So thank you, sir, for giving that guidance, but which is there. Coming back to our topic today, we're discussing about affordable financing solutions. The first question which comes to my mind is that how affordable are housing today? So I guess this is something which we should probably discuss about that. Are homes really affordable or not? Right, and we will probably discuss a spectrum of areas, right from how affordable the homes are, and then how can we actually look at areas where we can make it more affordable and accessible to the intended consumers and the borrowers as well. So, sir, first question: how affordable are homes? Is it affordable? You've seen the entire spectrum.
So just before that, thank you for that introduction. I think that when somebody calls you a veteran, basically they're saying you're too old. But yeah, because my story with housing goes back like at least 20, 15 years now when we set up this company, and things on the ground have changed dramatically since then. Because when we started, there was no UPI, there was no Jandan, and but the customers were pretty much the same. So we had to operate in the dark really for most of the customer data that today has become very easy. So tech has completely changed the landscape of how you approach the customer, how you understand him, and how you serve him. All three have been impacted profoundly by technology. But our own story was enabled a lot by the politics of that time, because when Prime Minister Modi took over, one of his pet themes, fortunately for us, was housing for all. And that created a whole lot of interest in affordable housing, both in the creation of affordable housing and also in the financing of that. We happened to be the first company which is focused on the financing. And so we started addressing each one of the challenges in terms of how do you get your customer to know that they could get a loan from a formal institution rather than a money lender. And then also, how does the institution itself understand the customer in such a way that we are able to define affordability for the customer. And the third big challenge was not enough houses were being created. So the houses that were being created either were, you know, additions to informal titled dwellings, which were not formally financeable, because then you would get into a huge debate of how affordable or how enforceable is the security and issues like that. So we wanted to keep it very clean, saying that okay, we will lend to informal customers, but for formal housing. And so which kind of led to the conclusion that the customer is actually not buying your product, he's buying a home. And we are just a corollary or a support system and a provider to somebody's aspiration to own a home. So we had no illusions about being, the solution for the customer. He had to first identify a house, and then most customers kind of self-qualify because they know what they can afford, even better than most lending institutions. So somebody who's like making 30,000-40,000 rupees a month is not going to go and buy a house of 1 crore, because they self-select, and they are very careful about how and what components have to be in place before they can even talk to a lender. The main issue was getting them to know that we existed, and we existed purely for providing that loan. So that was one of the challenges, one of the many challenges. But without the point I'm trying to make is that without that government push for creating the sudden huge interest in creating housing or affordable housing for the poor, and the timing in terms of creating the environment, the financial environment that enabled all this, the technology and the finance and the government push, fortunately for us, all came together precisely at the right time, which is what allowed us to succeed. I think today things are a lot more mature and a lot more reliable in terms of data, in terms of sources of funding, financing. There are issues there which we'll get into. And there are many solutions that have been debated at the policy levels. But some of them actually we've been debating for longer than most mortgages. Okay, so 20-year mortgage is nothing compared to a discussion on how to make the debt market more liquid and more active. That's been going on for more than 20 years. So issues like that, I think there is a need for the industry and the policymakers and the government and the regulators to come together to tackle these problems one by one and address them before we can make it. Because the supply side issues are like more or less getting sorted because there are more and more construction activity going on. The affordability issue is like, what can I say? I mean, from the time when we started to now, people's incomes have gone up, but asset prices have gone up even further. So that gap between affordability and the price of the asset is like, I don't know how that can be solved, but I guess the reason why Vastu exists. By the way, congratulations on being the board.
Thank you, sir.
So the question is, how do we all come together and acknowledge that here are the main issues which stand in the way of a person owning the home, and how can we help? That's where I think.
I guess that's a very pertinent point, and I just want to bring it to the everyone in this room, and I'm sure there was a dream sold to us when we were kids by our parents that बड़े हो गए तो जो करना है करो, right? And the same dream even I grew with, that okay fine, I will work hard, I'll study hard, and I'll get my job, and then I'll do whatever I want to do. But that dream broke at the very first instance when I got a job, is that my father gifted me a home loan, saying that now it's the time you go and buy a house. And bam, I was married to a home loan, and I still remember, sir, my salary was around 26,000 rupees, and I was paying an EMI of 19,000 rupees because I bought a house in Vashi for 16 lakh rupees. So even then, it was not affordable. But the question to everyone is that how many of you feel that homes are affordable today, or you feel that it is something still a myth, or we are still in that dream which has been sold to us? How many of you, I know you feel that housing is affordable or not affordable? Anyone who feels that is affordable? Not at all, right? So I'll share a pattern with you. So in Bombay, there is Mumbai. Sorry, I'll not be allowed back in the city if I say Bombay now. But in Mumbai, there's a very interesting fact that you go anywhere in the suburbs, you will get a 1 BHK for a range of 1 crore. You go to any place in the suburbs for a 2 BHK, you will get in the range of 2 crores, and you get a 3 BHK for 3 crores. And it baffles me why, because say Oshiwara also the same rate. You go down to Vikroli and Kanjurmarg, that area, the same rate. You go to Navi Mumbai, Ghansoli, that side also same rate. Panvel also same rate. What changes is the size of the flat or the apartment. Exactly, of the area. So, is it still a dream, sir? Is it something which is really affordable, or are we still in that, la la land that yes, someday it will be affordable?
No, I don't think anybody is spending the rest of his life to go up the curve to be able to afford it. I mean, you got to, like you said, on a 26,000 rupee salary, you are willing to make that commitment to pay 19,000.
Because I was staying with my father, I had no other expense.
Yeah, but you have to make that call at some point in time, and you have to make that decision yourself. Because if you had gone to a housing finance company like mine, with that kind of salary and this kind of EMI, we would have rejected you. 100% we would have rejected you, saying that this is unaffordable. So, affordability from your point of view may vary very, very much from affordability as defined by the lender. Lenders have loan to income ratios, loan to value ratios. These are all, cast in stone. Right? I'm telling you, 19,000 rupee loan on a 26,000 fixed salary was a no-go. But I don't know which bank you get.
ICICI Bank.
ICICI Bank, good for you, yeah. But you have made, that house must be worth such a lot that, you don't regret it at all, right? I mean, you might need to struggle the first few years. And therein lies the point, because most housing finance companies look at incomes versus installments in a fixed kind of scenario. They do not assume that your salary will go up. Right? I mean, if you're in a job, every year you will get 10% more, but your EMI is fixed based on your current income, not on your future income. So these are, especially for people who are in the informal sector, where inflation itself will take their income by higher and higher, because they're selling a product which is more and more expensive. But we don't take all that into account. We need to make a mental shift on many of these rules which were given to us by our predecessors. HDFC, I think, set it in stone earlier, or State Bank of India. Those rules also need to change to reflect the current reality of incomes, current reality of income growth, current reality of the diversity of the kind of incomes. That how do you evaluate the income of, let's say, we have done loans in our days of for his main job was straightening bamboos for scaffolding for houses. So there's no data how many, I think in the whole world there may be 10 people doing that. So, but we still had to figure out he had to figure out first for himself, what is affordable, what's not. And then we had to either believe him or not believe him. That was the only two decision points. We happened to believe him. And we believed him so much that within 4 years he prepaid the loan. And we had so many naysayers saying that, it's okay, how is he going to make so much money? But things actually, once you have a home which you believe is yours, you're proud of the ownership of that, and you're committed to repaying it, servicing it, you will find the means. And lenders need to have the confidence that, a single piece of paper saying that you're making 26,000 rupees a month is of less importance than the customer's confidence in what he's buying and his own belief that he can afford it. And he will find a way to make, and then you have to sign on to his belief.
Correct.
And it's a leap of faith. To a large extent, it's a leap of faith. I mean, no, we did not waste time in trying to be precise about the customer's income. We wanted to know that is he making between 25 to 40,000 rupees a month or no. We didn't want to know it is 26,000 rupees. We didn't think it was relevant at all because we know that each person in the informal sector, his income is going to be variable. It's not going to be constant across 15 years. Hopefully it'll keep on going up. The EMI will become more and more affordable, and finally, the proof of the pudding is in the eating because we had zero NPS.
Correct.
We had some problems of delayed payments and all, but other than that, nothing.
So Madhu, that brings me to a question because you touched upon the assessment of profiles, right? And as affordable housing finance companies, one of the things which we have seen as a shift in the credit culture over the last 10, 15 years is that how the assessment is done on a cash flow basis because most of our time, most of our processes, most of our systems are developed in such a way, designed in a way where we do cash flow assessment, which say a formal bank may not be able to figure out. You give a very good example of a bamboo straightener, right? Because that's a trade which we have observed and we have seen that on the ground, and based on our personal discussions, we have built those models in our scorecards and templates. How has, in your opinion, that the entire credit culture or the credit scene has transformed over the years? Is it gone good? Is it gone bad? How the new technologies, AI, ML, etc., helping in that space? How do you think that space has evolved in the last couple of decades?
So I'm very optimistic by nature. But
The reason I'm
especially
asking is
about
that
business.
it helps to lower the cost ultimately, right?
Yeah,
So that's
for sure. Yeah, I mean, if you believe that that we are on a growth path, we are in a credit culture in this country is so strong. It's unbelievable. It's not like America and this that your property prices go up, you automatically default over it. It has nothing to do with your income, right? You've seen the crisis in America in 2008. It was driven mostly by the value of your home versus the value in the marketplace value of the home versus how much you're paying for that same home. If the price of that dropped, you would default. Automatic. I mean, it's like a no-brainer for the customer. But our culture is very different. The Indian culture for debt. I mean, there are pockets where I would think that it's got diluted a bit, but otherwise our credit culture is very, very strong. If we buy something, first of all, we don't buy it unless we believe we can afford it, and two, there's so much family support that if micro finance institutions talk about self-help groups and stuff like that, but in a mortgage, that self-help group is actually an informal, already established for generations. It's there. So if you are, if you need some kind of an accommodation finance, you go to your brother or you go to your aunt or your in-laws, or somehow, I don't know whether we solved a housing problem by creating a dowry problem. I don't know about that. But fortunately, the credit culture is so strong that it is almost certain, at least to me, that you don't have to worry too much about the income, the precise nature and amount of his income. You can take a general belief that this guy is buying a home, he knows he can afford it, and he's at least committed to paying. Now circumstances can change, and very often a person defaults not because his income is gone or anything has happened, but tragedy. In a 20-year cycle of a loan, lots of things happen, like death in the family or a marriage where a lot of money needs to be spent. Those are the events which are more of a risk from the customer's point of view. Otherwise, he is already knows how much he can afford, and he is the first credit officer, the customer. So, like I said, I'm an optimist, and I prefer varied kind of jobs for varied customers, people with multiple jobs who are trying to make two ends meet, but who are committed to servicing the housing.
In fact, just to add to Madhu's point that actually big data, newer technologies like artificial intelligence, machine learning has helped us to uh, bring down the overall cost in the processing of the loans itself. So when we look at cost, we look at in three tiers. One is the cost of acquisition of those loans, the cost of processing that loans, and of course the cost of servicing the loans as well. In our case, the cost of servicing is little higher because of the segment we deal with. But what technology has actually helped, and we learned from MHFC is that it has helped us to now keep the cost lower on cost of acquisition and cost of processing. That entail actually gives us that ability to pass on that to the customer itself. So we are able to actually service our customers at least 50 to 60 basis point lower than traditionally we would have actually given that loan. Because that was saving actually, we are able to do that. So we are seeing that things. But just leading on to that same question, that how do we actually make it more affordable? Can we look at within the regulatory realms? For example, our regulations doesn't allow, in a way, not directly but indirectly, that you can't lend more than 20 years. You can't go, your LTVs can't be above, say, 75%, 80%, 90%, typically based on the norms. But there are markets or there are, developing economies where we have seen that 100% funding is done, right? And especially in the affordable category, where it makes that more sweeter deal for the end consumer to go and buy housing. So, what are your thoughts on that? How can we actually make it, from a structural perspective, more affordable? Then we'll get into the more financing part of it. But then, for an end consumer, how do I make that? You hit a very nice point that how can I make that EMI more affordable to that person, right? Today, the EMI is a function of, the multiplier we put in. That okay, you're earning 100 rupees, so I'll give you a multiplier on that. But how can I actually make from a structural point of view more affordable is a question.
Let me address the first issue that you raised about increasing the tenor of housing loans. Now you've been in Vastu, I think at least for 10 years now, and I've run my own housing finance company also for 10 years. One thing I know that you might start with the intention of lending 15-year money or 20-year money, but I bet to you that the average maturity of your book is no more than 7.5, 8 years.
6 to 7 years.
Because there's such a lot of prepayment and there's such a lot of, there's huge amount of prepayment that takes place in the industry, which leads me to believe that it's a myth to say that 30-year loans will make it more affordable. Because in any case, people are going to prepay because we ignore the fact that customer incomes are going to go up.
Exactly.
So, that's one angle to it. In terms of the value of the loan to value ratio, being like, I think that, once you, it's something, it's regulatorily mandated today, right? That you need to have a certain loan to value ratio on your books, or else you have to put in more capital or you have to provide more or whatever. So the fact is that, as a loan matures, your loan to value ratio is automatically improving anyway, as every installment reduces the loan to value ratio. Fortunately for us, we are in a rising asset price scenario that on day one after you've bought it and taken possession, already the property price has gone up 10-15%.
Absolutely.
Why be then obsessed about, making sure that the customer has put in 15% up?
Exactly. Yeah.
So, this is something that we need to really re-examine ourselves before we make a case to the regulators saying that, regulators understand everything. They see these books of all the housing finance companies and we have to prove to them with data that this is what's going on. And equity of the customer in the house is constantly increasing from day one. By 7.5 years, it's 100% equity. By then he's repaid.
Exactly. And it's again a fallacy because, Madhu, you really hit the right point because nobody finances or nobody actually finances their own, through their own OCR or whatever, that own contribution. Because even that 20%, 15%, 5% or 10% of that own contribution find ingenious ways of getting financed.
Yeah.
Right? Why not acknowledge that fact and build in a formal way? Like I can give you example of Brazil. The same thing. There are schemes, especially for the low income groups and the middle income group. Similarly in South Africa, similarly in Singapore, HDB has a scheme where you can actually buy a house 100% financed, from HDB directly, which has given a more stable structure for the housing segment. It has given a more stable, income estimation for the borrowers as well. And at the same time, they are not under stress. Like, okay, fine, I have a, huge EMI which is coming up. It's just that point that, how can you make it more at least palatable for these guys so that it can take off?
I believe that it's a mindset issue, that being obsessed with the own contribution of the customer into a loan strengthens the loan. What if the customer has borrowed from a money lender to put in that?
Exactly, yeah.
Right? The money lender has more control because he's there on the spot, and you're sitting in Bombay lending in, let's say, Raigad. The money lender obviously has more control than, and he will take his money out before you get your money.
That's right.
And we are saying that, okay, customer has put in 15%, so we are saying. So I think that's a big fallacy that we all suffer from. But, and it is actually, it leads to wrong decisions.
Right.
Because, you feel complacent saying that customers put in money, so hence we are saying. But the customers, it's not customers' money, it's borrowed money.
Correct.
And that too at a higher rate than what you're lending, 75%.
That's right. That's right.
Yeah, I don't know how to address this, but I think again, the solution lies with the regulators and making a cogent case, saying that this is the reality on the ground where affordable housing is concerned. I can understand, when somebody is buying a 5 crore house, a villa on the golf course, and there's that, then you need to know
course.
that the customer has got some stakes in
Correct.
the game. But these are houses which are easily transferable, and if this guy can't pay, you sell the house and somebody else moves in and he can pay. So it's absurd, but that's the way it is.
And the question is specifically to the EWS and LIG and the MIG segment only, because we're not talking about HIG segment where, of course, it has to be that the skin in the game has to be there. Otherwise, the propensity to default also goes up higher as they go the value chain. So very clearly on that fact, but brings again to the same question that what are the other ways where we can actually make for a customer their home loans more affordable? Because again, every time when we look at it, they all look back to RBI saying that, okay, RBI will reduce rates and then my home loan will go down. What are the other ways? Because West or the advanced economies have shown that by way of, say, a credit guarantee schemes, or for matter, public money which is coming back to us, like a Freddie Mac or a Fannie Mac, making it much more affordable in terms of, having mortgages on the space. So does India has a long way to go? Are there any steps being taken as of now? Or, because we saw some of the agencies do crop in, but they've hardly made any dent, right?
No, but the new one sounds promising to me. But like you said, the answer to both the questions is yes. Is there a problem? Yes. Is something being done about it? Yes. But has anything changed? No. So, this is something that we are going around in circles for a long time about, the guarantee. First of all, the guarantee itself is too expensive.
Right.
And that comes from the customer's pocket. If you pay 2.5% of the value of the home as the guarantee commission for, that has to come from the customer either upfront or over a period of time. And then secondly, it's also not, it's not 100%. What I understand is the latest scheme is 80% guarantee. The rest is still open. So you still have to provide and keep 20% of the risk on your book. But still, I think it's a fair start. Like Fannie Mae, when it underwrites it actually buys out the mortgage.
That's right.
And then reissues bonds back.
Yes, back to back.
So that is 100% guaranteed by the federal government. That's where we need to get to, for at least for these so-called affordable housing. At least we need to make that exception, saying that okay, we will guarantee the entire thing, and hopefully because the value of the house itself going up, it's not as if it's an incredible risk that anybody is taking.
We'll shift gears now. Now that we have spoken about affordability in terms of a consumer, we'll now shift to the lenders itself, right? And we have different sets in the lending community, right from your banks to large NBFIs or housing finance companies, and then affordable housing finance companies like us. There's a whole spectrum out there. And then you get the credit at different price points. Of course, because of the input cost, each of them actually look at it. When we talk about that, the majority of them actually looks at bank financing. And the issue has been always for a bank financing, which is where, you know, affordable finance companies like us or housing finance companies have a challenge is on matching the ALMs around it. Because there is a cost which comes with it. Lot many people overlook that, but there is a cost which has to be priced in and which ultimately gets passed on to the consumers. How can we correct that? Is there a way, or is there any thoughts in terms of how can you make it the bank credit, because banks don't lend long, and housing is a long tenured asset. So how can you actually match that? Is there any thoughts on that?
So, I mean, I don't have any, let's say, magic wand kind of solution to it, because the market behaves in a particular way which is reasonably predictable. In the sense that like we said earlier, even though you're giving 20-year loans, actually in reality the tenor is only 7.5, 8 years.
Absolutely, yes.
Okay, so as long as, but in your ALM, you're always showing it as a 20-year maturity, whereas the real maturity is 7.5 years, and you're borrowing 7.5 or 5, 8, 7 to 8 years is what you're borrowing. Nobody will lend you more than that. Again, we come back to the elephant in the room, which is the bond market, which just refuses to behave in a predictable way or in a way that it behaves in more advanced markets. Let's say that. Because I know that most of the housing in Singapore, for instance, or France, or even in America, it's funded a lot by the bond market.
That's right.
Bond market is not by banks, but by people who issue bonds, either against the security of the house itself, and then there are enough people who are willing to invest in it. Unfortunately, our bond market has not shown the depth or the wide range of participants that it needs. So debt in India is like between the issuer and 3 or 4 people who buy and hold it till maturity on their books. It doesn't trade that much, except for government securities. Nothing else actually trades. So that itself we need to fix. I mean, like I said, it's longer. This debate is longer than the mortgage debate.
That's right.
Yeah, and I know that the Reserve Bank every time keeps saying that we need to do something about bringing liquidity into the bond market. But it's not also for them they cannot solve it on their own by just wishing it away. Because you need participants who are comfortable with holding, let's say, corporate or mortgage-backed securities as part of their portfolio. Today, the problem is that, there are maybe 50 of us sitting here. I don't think anybody has got even government securities in your portfolio.
It's not allowed to directly take it, right? So
It's allowed, but nobody has.
nobody has it here.
Nobody has government securities. Then where are they going to buy mortgage-backed securities and put it in? So, we have to start from scratch and build up to a solution.
So just to add to Madhu sir's point as well, there are some structural issues also with bank funding as well. For example, on PSL, if it has to get qualified for PSL, then typically it is limited to only 20 lakh rupees if it is lent to an AHFC or HFC or NBFC. The other is that it has to be co-terminus. Now, co-terminus means that if I have given a loan for 20 years, then the bank also has to lend for 20 years. Not possible. That has to change. As sir mentioned, the actual life of a loan, a mortgage loan, is around 6 to 7 years, though the contractual maturities is for 15 years or 20 years. So that co-terminus is actually playing a very vital role where PSL loans are not getting qualified and banks are not able to give PSL loans linked to that. Because if they are giving it, then they have to give it to that long tenor. So they are not giving, they are keeping away from that, and that's again a big challenge in terms of bank funding. You started and touched upon capital market, very favorite topic. Spend ages in that. Still, we hear the same thing that it is quite shallow, not happening. And you rightly mentioned that how bond market has actually helped for housing sector to be more vibrant. So just to share an example with the audience here is that city of New York, I'm now talking about 1930s, not even now. When they wanted to do affordable housing, or when they started off, they found a very unique way because at that time Great Depression was going on, and they didn't have money, right? Because markets were down, they were staring at famine, and then of course the World War II also started beyond that. So what they did is that they just announced that okay, fine, here is a new port which is coming up, and around that they started announcing infrastructure projects, and based on that, lot of property registration started. That property tax which were they collecting and the anticipation of that property tax which they started trapping that in a structure, and they issued something called, which is now a very vibrant instrument called Garvey bonds, that is government anticipated revenue vehicle bonds, which is where Las Vegas was also set up with. So this money was actually which they trapped it, thinking that okay, fine, for 20 years, 30 years, these are the property taxes which are going to come in, and based on that, they issued bonds, and that bond money, which was then used to actually construct houses, which you can still see in areas like Bronx and all, which are these that typical brick walled apartments, which are which actually changed the living standards in New York at that point of time. Similar model was actually copied that in Sao Paulo in Brazil. Similar is again HDB in Singapore. Why not in India? Why not we are seeing that?
I'm not sure whether, see, finally,
Why can't our
you
policymakers?
can create the structures. The structures, I mean, India is equally capable of creating these structures. What we don't have is a body of investors
That's right.
who are willing, like, what you need is, a bunch of investors who could be mutual funds, could be pension funds,
Insurance
could be
companies.
insurance companies, who are looking for 20, 30-year maturities to sit in their portfolios. Who are the largest buyers of 30-year government securities? Insurance
LIC.
companies. They are buying it. So why can't they buy these mortgage-backed securities and put it on their balance sheet? I mean, the I think lots need to change. It's not that we cannot create this anticipated revenue-backed bonds, but what we cannot create is the change in the mindset of insurance companies saying, okay, this looks interesting, and we are willing to put it on our portfolio, provided it gives you 2.5% over the government of India rates. Because,
Absolutely right,
yeah,
sir.
you have to price the risk, and then these are professional investors. Those pools need to exist. Those pools do not exist today.
So look at India itself. There are these 12, 13 large cities, probably the largest conglomerates in the world as well, like Mumbai, Delhi, Calcutta, Chennai, Bangalore, you name it. The 12 large ones. None of them, unfortunately, like they get tons of money on property tax. Like one thing which really comes on time at my house, I will not get the milkman bill, but definitely the BMC bill I get it on time, right? And I have to pay that tax in advance. Otherwise, they charging that 13%, 12%, penalty on it. Point I'm trying to make is that they get so much of revenue, which is again anticipated, which they can use it for building affordable homes in the city. It's very predictable. But why policymakers are not looking at that is a question.
Again, I think the answer is that there are no investors. It's not that BMC can't issue these bonds, but the problem is that mutual funds need to think of it as a good investment, and we don't have track records in terms of default rates and this that to price it properly. But I think eventually it will get there because there is so much underlying demand from the lenders, whether it's banks. See, we were talking about banks lending money. First of all, banks themselves don't have access to more than 7-year money.
That's right.
Your fixed deposits are maximum 5 years, 7 years. So where are they going to lend 15-year money from? Then you're just passing on your asset liability mismatch onto a bank,
Right.
which is again not fair. So we need a structural solution. There are pools that want long-term maturity, which is basically insurance and pension companies. And then you need companies which are comfortable with the medium term, 10 to 15 years, which are generally mutual funds, I would think. And then you also need some retail high net worth individuals to say that, I need diversification in my portfolio. Not just equities, not just government securities, not just fixed deposits. I'll also put in 5% of my money into mortgage bank securities because they give me 9%. So we need to change the investment culture in this country little by little, little by little. We need to work on it. I mean, like we started with trying to solve the housing problem, we ended up trying to solve the bond problem.
Because ultimately the underlying is the ability of
It's all
finance.
related,
Yeah, so because you get cheaper money, you are able to lend cheaper money.
Yeah.
That's the bottom line here.
Yeah, yeah.
Sir, off the records, I will meet you and tell you actually because I used to rate BMC. I used to do the ratings for BMC and I've been to their cash vaults and I've literally cried seeing the condition of the cash kept. So sorry, that's a different discussion.
No, but the point is very valid. Our whole system is not, it captures pools of money and it stays there. It does not, distribute that money back to where it's required. Like housing finance companies need money, BMC is sitting on the money. And there's nothing you can do to change that. So, yeah, these large pools of money do exist and they are growing larger and larger, but we need to find a solution to make it flow easily from one pocket to the other.
Look at, I guess Mumbai is a great example. Like there is a scarcity of land, right? The only way you can grow is vertical, or you go to the outskirts, which is surrounding a periphery and all. All that land is with MMRDA, right? 90% of them is actually owned by BMC or TMC or NMMC. But what are they doing with that, right? Even the older dilapidated units to get a COD for a redevelopment is a 8-year process. 8-year process, and there are multiple agencies looking at it. Start an application from Mantralaya, then you go all the way up to Andheri. Why? Because MMRDA, MHADA, all offices you have to visit, right? And then you have to do the bidding process, and then one person in the entire society will create a spoke which will have these entire issues. Not, but you look at other markets where you have a one window shop, right? And if anybody has an objection, they go for renewal. So the question was again coming back to is that how affordable is also is a derivative of the time and money spent around it. Is because it's just not that finance is available cheaper or it is expensive or there are different investor classes available, but it's also the time taken to actually do that development as well. So that's a dichotomy I guess we are all facing.
Yeah, time costs money and the number of approvals also costs money. And BMC, by the way, is the richest municipal authority in the world. They're sitting on so much cash and they can change the rules and they're selling the sky, saying that FSI they call it. And they, right now you can go up to 90 floors and they're making money or not, but they're not, it's just sitting on their balance sheet. That is the problem. If it was sitting in a way that, could be accessed for growth, that would solve the problem.
So I've been passed a chit that we have to conclude. So before we conclude, for a change we are having an engaging audience. So any question with the audience would be happy to take it. Yeah.
That dream be fulfilled. 2030,
When will we not have
2045,
slums?
when 2047, Vision 2047.
So, theoretically, housing for all is supposed to solve the problem, right? It's only theoretical, but that is what is supposed to happen. But I do know that, the slums, there is, of course, a large project going on in Bombay right now of, recreating
Dharavi.
Dharavi or reimagining Dharavi and things like that. I don't know how far it will go, but I do know that, I've been to many of them, many of those slums when...
But sir, do you believe that Dharavi is a slum? Dharavi is for me is a
it's a very vibrant community.
vibrant industry house, right? I don't know how many of you know that.
And they use space, and it was mind blowing to me when they don't look at space as square feet anymore. They look at space as cubic feet. Because, it is like height, and so, you have layers of beds, layers of, things that fold back, and, such fantastic utilization of space that no architect has even imagined. Because they sell space in laterally, where these guys are selling space for the space. So I don't know that answers your question, but my belief is that everything will change slowly, but it will change for the better. Otherwise, there's no point in trying to create low income housing solutions or financing solutions. But yeah, I'm optimistic, like I said.
See, the solution to that is, sorry, I'm just taking this. No, solution to that is that you have to provide alternate housing for that, and we have to do segmentation around it because it's an ecosystem, right? Because when you have apartments, then also there are, support systems which have to be there. It can't be that the person is traveling from 50 kilometers away to give that service there. That will not work. So you have to have that ecosystems which is in a way equal opportunity for everyone. Of course, the sizes and the contours of that can change, but literally it has to there. Um, yes, 2047 could be a date which we can look at it. Yes, sir.
Yeah, hi. This is Vikas Agarwal. I am from Mumbai, so I can understand whatever you are telling. Tomorrow is BMC election also.
We share the
so-
same problem.
I am helping a few HFCs for raising funds from banks and NBFCs. So first of the challenge always we face that the tenure of the loan, like this, they are doing only for 2 years or 3 years, and where like loans what to the borrower we are doing for, let's say, for 20 years, so 15, 20 years. So that's a very big mismatch of the ALM what we get, and then again the rate of interest, that kind of issues comes. And again when you go like even for the, just I'm taking the name LIC Housing Finance also, they also ask for the, you are doing affordable housing financing and all, then also they will ask what all the ratings and other things, and don't want to go on the priority sector lending sort of things. So how such kind of situations or the, I mean the can be resolved in terms of solving ALM, or I mean how these banks can go for more, or HFCs can go for more priority sector lending as affordable housing.
So, my friend, you've hit a very question which there is no answer for it. Because unfortunately, housing finance companies are born with a ALM mismatch, right? Because as you rightly said, the assets are longer tenured and you don't have the liabilities matching to it. Sorry, Sam, like just extending on that, because that's a problem which I daily face in terms of managing the debt side of that, of the business as well. So yes, that's a problem, and hence there is a cost which gets built on it because you have that mismatch. No matter what you say, that we keep on saying that data shows that actual life of the loans are 6 to 7 years at max, right? Even for the affordable houses as well. Now that we have seen at least 3-4 credit cycles as well, it is again in the same range only. It's not any different. But when you get to pricing or in terms of ALM, it is still done at that 15 years or 20 years. So as a housing finance company, I still have to maintain that liquidity. I have to still maintain that LCR. I have to still maintain all the provisioning which I have to do. I have to still maintain that capital adequacy, which comes at a cost, right? And that cost get built into the ultimately what we loan there. The solution to that is that we should have access to longer term, liabilities. That is the only way to solve this. And for that, you should have a vibrant capital market, whether it be in the form of a bond market or whether it be form of alternate markets like ECB and all. Like for example, we raised a ECB for 20 years, which is never heard of, right? And people are surprised that how could we raise a $50 million for 20 years? But yes, that helps me to actually solve a bit of my problem and pass on that benefit to the customers, because that money came at a cheaper cost as well. So the answer to that is exactly that we need to find long-tenured investors. We have to have a diversification of investors, and that's where our belief is. Yes, sir.
I find it very ironic that you mentioned LIC Housing, because LIC, the parent company, is the largest holder of long-term liquidity and long-term liabilities in the whole country. So for them to solve that problem is just like moving from one pocket to the other. So yeah, that's ironic, but that's what it is.
Sorry, one last question. I guess or we just have a close. Yeah, thank you so much. It's been a wonderful session, sir. It's been great to catch up with you and have this kind of a conversation.
Thank you.
Really enjoyed it, and I hope you guys had a good time. Thank you so much. Happy Makar Sankranti, Pongal, and Lodi, if it's still there. So thank you so much. You've been a nice.
Thank you.
audience.
Thank you so much, Satish and Madhusudan sir. I think this was a highly thought-provoking session. May I request the two of you to come a little forward for the picture? And I request the ushers to present you with a token of our appreciation. Thank you so much. Can we have a huge round of applause for the two of them? Thank you so much. And I request all of you to quickly move to Hall B. We are due for our next plenary. There isn't any networking break, so would request you to quickly move to Hall B. Thank you so much.